Welcome back to the SENB Daily Brief, the show where Bitcoin flirts with 80 grand, gets rejected harder than a bad ETF pitch at a banking convention, and somehow everyone still acts surprised. Over the past 2 weeks, BTC charged straight into major resistance near $80,000, fueled by institutional inflows, corporate accumulation, and enough hopium to power half of crypto Twitter. Only to yank back nearly 3 grand today as oil spikes, geopolitical tension returns, and macro reminds everyone who's actually in charge. So congratulations to everyone who declared new all-time highs imminent 12 hours before the retrace. Your timing remains historically impressive. Meanwhile, April just became the worst crypto hack month since 2025, with over $600 million drained from DeFi thanks to major protocol exploits and what increasingly feels like North Korea running the most profitable crypto hedge fund on Earth. But it's not all chaos. Bitcoin 2026 officially opens today in Las Vegas, with regulators, billionaires, and maximalists descending on the Venetian like it's the financial Super Bowl. SEC chair appearances, Sailor buying more supply, and regulatory clarity talks are all colliding at once. Because naturally, nothing says decentralization like government officials keynote speaking at the world's largest Bitcoin conference. Bitcoin is at resistance. Regulation is at a crossroads. Institutions keep buying, hackers keep stealing, and Vegas is officially the center of the crypto universe this week. Let's break it all down.
You're listening to the Sen B Daily Brief, powered by Whole Shot Coffee.
And we're back. Let's get into the market recap. Bitcoin is currently trading around $76,500 after a sharp rejection from the $79,400 to $80,000 resistance zone earlier today. That puts BTC down roughly 2.7% on the day as geopolitical uncertainty, oil volatility, and broader macro caution triggered profit-taking after what had been a strong multi-week climb. Technically, Bitcoin remains in an overall recovery channel, but this pullback reinforces that the $80,000 zone is still acting as major psychological and structural resistance. Immediate support now sits around the $75,000 range, with deeper downside risk toward the low $72,000 if broader markets deteriorate. Translation: Bitcoin's still bullish, but apparently not ignore geopolitics and moon instantly bullish. Ethereum is trading near $2,276, down about 3.8%, facing heavier relative weakness as capital continues favoring Bitcoin dominance over broader altcoin expansion. ETH remains above key short-term moving averages, but momentum has cooled significantly. XRP is holding near $1.39, down roughly 3%, while Solana has retraced to about $84, down over 3%, as security concerns and broader DeFi weakness continue pressuring risk appetite across major alts. Total crypto market cap sits near $2.56 trillion, while Bitcoin dominance has climbed to nearly 60%, a major signal that institutional and defensive capital continues consolidating around Bitcoin over speculative altcoin exposure. The Fear and Greed Index currently reads 42, neutral, down from recent highs, reflecting growing caution but not outright panic. In other words, sentiment has cooled, but the market hasn't fully broken. Basically, traders went from Lambo soon back to maybe I should wait until after the Fed. Bottom line, Bitcoin remains structurally strong, but $80,000 has become the line in the sand. Institutions are still supporting the broader trend, but short-term volatility is back on the menu. After the break, April's record-breaking crypto hacks and why over $600 million vanished faster than trust in unaudited DeFi projects.
Some mornings start quiet. No rush, no noise. Just good people and the decision to roll forward.
All right, and we're back. Now, let's talk about the part of crypto that somehow still manages to shock people. Massive hacks, disappearing billions, and security systems held together by what increasingly feels like duct tape and optimism. April 2026 has officially become the worst month for crypto hacks since 2025, with total losses surpassing $606 million across more than a dozen major incidents. And over 95% of those losses came from just 2 catastrophic exploits. First, Kelp DAO, primarily on Solana infrastructure, suffered roughly $292 to $293 million in losses tied to Layer 0 bridge vulnerabilities and cross-chain manipulation. Then, Drift Protocol, operating heavily within Ethereum's DeFi ecosystem, was hit for another approximately $285 million through a sophisticated operational exploit. Security analysts largely attribute these attacks to North Korean-linked Lazarus Group operations, once again proving that state-sponsored cybercrime remains one of the most effective hedge funds in crypto. While some investors were debating candle patterns, Lazarus was apparently just reading smart contracts. The aftermath was severe. Over $8 billion, and by some estimates, as much as $13 billion in DeFi capital rapidly exited staking protocols, bridges, and related ecosystems as users rushed for safety. Total value locked across several sectors saw immediate declines, further damaging confidence in yield-based systems. This isn't just about stolen funds. It's about trust erosion. Every major exploit reinforces institutional hesitation, retail fear, and regulatory pressure, especially around cross-chain bridges and staking infrastructure. Bottom line, DeFi security remains one of crypto's biggest unresolved weaknesses. Until bridges, audits, and operational controls improve dramatically, every new protocol expansion carries both innovation and existential risk. In simpler terms, not your keys, not your crypto, may now need an update. Not your bridge, probably not your crypto either. Coming up next, Bitcoin 2026 opens in Las Vegas, regulators hit the stage, and the crypto world temporarily trades Twitter doom posting for conference badges and overpriced coffee. We'll be right back.
She redefined what it meant to race without limits. She proved that silence could be louder than words. Fearless, fast, focused. A reminder that champions are built on grit. That same intensity now fuels her signature blend. Roosted and roasted. Bold Italian roast crafted with the spirit of champions. Ashley's Roosted and Roasted, only at wholeshotcoffee.com.
And we're back. So, while hackers were busy stress testing DeFi, the rest of the crypto world officially packed its bags for Las Vegas. Bitcoin 2026, the largest Bitcoin-only conference on Earth, opened today at the Venetian, with more than 40,000 attendees expected over the next 3 days. That's right, Bitcoin has once again transformed Vegas into a strange hybrid of financial summit, tech expo, political rally, and digital gold fever dream. This year's event carries historic significance for one major reason. For the first time ever, a sitting SEC chair, Paul Atkins, is scheduled to appear alongside CFTC leadership, Senator Cynthia Lummis, Michael Saylor, and other major institutional and policy figures. That level of regulatory presence signals something much bigger than conference optics. It reflects how deeply Bitcoin has entered mainstream financial and political infrastructure. What was once treated as a fringe experiment is now being debated directly by the highest levels of U.S. regulatory leadership. In other words, Bitcoin has officially gone from internet magic money to, please welcome our keynote speaker from the Securities and Exchange Commission. The event is already generating major X activity, with Ripple teams, mining giants like Mara, institutional firms, and policy insiders all driving heavy social volume. Mara's quantum computing research initiatives, regulatory frameworks, and institutional infrastructure discussions are dominating headlines. The stakes are significant. Any pro-Bitcoin or regulatory clarity signals from SEC or CFTC leadership could materially boost market confidence, strengthen institutional positioning, and add momentum to broader legislative efforts like the Clarity Act. Bottom line, Bitcoin 2026 isn't just another conference. It's shaping into one of the most important convergence points between crypto, government, and institutional capital this year. So yes, there will be laser eyes, overpriced merch, and plenty of maxi speeches, but this week may also help define Bitcoin's actual policy future. After the break, Michael Saylor and Strategy continue vacuuming up Bitcoin supply like scarcity is just a personal challenge. Stay with me.
You're listening to the Sen B Daily Brief, powered by Whole Shot Coffee.
And we're back. So, apparently Michael Saylor looked at Bitcoin's limited supply and decided, you know what, I'll just buy as much of it as possible myself. Strategy, formerly MicroStrategy, has continued its relentless Bitcoin accumulation campaign, adding tens of thousands more BTC throughout April and pushing total corporate holdings to an astonishing 818,334 Bitcoin. Recent purchases included over 34,000 Bitcoin in a single week, worth roughly $2.5 billion, followed by another 3,273 Bitcoin added today alone. That places Strategy's total Bitcoin reserve above even some of the largest institutional products, reportedly surpassing BlackRock's IBIT in direct holdings and further cementing Saylor's company as the single most aggressive corporate Bitcoin treasury on the planet. At this point, calling it corporate treasury management feels polite. This is basically industrial-scale Bitcoin vacuuming. Strategy's average acquisition cost now sits around the mid-$75,000 range, meaning the company remains heavily leveraged to Bitcoin's long-term appreciation thesis. Their approach continues, relying on preferred stock offerings, structured financing, and capital markets instruments, allowing expansion without directly diluting common shareholders. The broader implication is substantial. Each large-scale corporate acquisition further reduces available circulating supply, while reinforcing Bitcoin's scarcity narrative. Combined with ETF flows and growing institutional participation, this sustained accumulation may be creating increasingly powerful long-term price support. Bottom line, Strategy is no longer simply buying Bitcoin. It's actively shaping supply dynamics in real time. And if Saylor keeps this pace up, we may eventually need to stop asking, how much Bitcoin does Strategy own? And start asking, how much Bitcoin is left? Of course, this strategy carries risks. Funding costs, volatility, and overexposure all remain real concerns if BTC stalls or macro conditions worsen. But for now, Saylor's conviction remains unmatched. Coming up next, the Clarity Act enters its make-or-break phase, and Washington may finally decide whether crypto gets rules or just more political theater. We'll be right back.
Monday morning starts here, coffee in hand, ready for the grind. Leaving the bike behind, chasing the week ahead. Fueled by the passion to ride and the coffee that gets us there. Whole Shot Coffee. Fuel your life.
All right, last one today. From what may be one of the most important long-term stories in crypto right now, regulation. The Clarity Act, Washington's latest major attempt to finally establish comprehensive crypto market structure, is officially entering its make-or-break phase. Senate Banking Committee negotiations resumed after recess, with lawmakers now racing toward a likely May markup after repeated April delays. At the center of the debate remains one major sticking point: stablecoin yield provisions. Current compromise proposals would ban passive yield simply for holding stablecoins, while still allowing activity-based rewards tied to payments, lending, or protocol participation. So, yes, Washington may soon determine whether earning yield is innovative finance or apparently too dangerous for adults to handle responsibly. Key players include Senators Tim Scott, Cynthia Lummis, Tom Tillis, and Angela Alsobrooks, alongside major crypto firms like Coinbase, Ripple, and Circle, all while banking lobbies and White House advisors continue exerting heavy influence. This isn't just another political process story. The Clarity Act could fundamentally define SEC versus CFTC jurisdiction, stablecoin compliance frameworks, DeFi operational boundaries, and broader institutional adoption pathways for years to come. In practical terms, successful passage could dramatically improve sentiments around XRP, stablecoins, tokenized payments, and institutional capital formation. But timing is critical. If negotiations stall beyond early May, election year politics and midterm pressures may effectively freeze meaningful progress until after 2026, extending uncertainty across large sections of the industry. So once again, crypto's future may depend less on code and more on congressional scheduling. Bottom line, the next few weeks could determine whether crypto finally gains meaningful U.S. regulatory structure or remains trapped in another cycle of delays, lobbying battles, and political theater. For investors, builders, and institutions alike, this one matters. After the break, Proof of Thought Mailbag, where we answer your questions, roast your takes, and apply at least some logic to the chaos. Don't go away. We'll be right back.
You're listening to the Sen B Daily Brief, powered by Whole Shot Coffee.
All right, welcome back to the Proof of Thought Mailbag, where your market questions, hot takes, and occasional emotional damage all come together for public analysis. As always, some of you are asking smart questions. Others appear to be trading exclusively on caffeine, vibes, and unresolved trauma. Okay, question 1 is from @DipCollector9000 and asks, Sen, Bitcoin rejected $80,000 again. Is this a top? Yes, because naturally, every pullback is either the apocalypse or the final top. No, right now this looks more like structural resistance and macro-driven retracement, not definitive cycle exhaustion. Could we pull back further? Absolutely. Is the broader institutional and scarcity narrative broken? Not even close. So maybe don't declare the death of Bitcoin every time it drops 3%. Next up is from @YieldFarmer420. Should I still trust DeFi staking after these hacks? Well, trust may be a strong word at the moment. DeFi still offers opportunity, but bridge security, protocol audits, and operational controls matter more than ever. In simpler terms, if the APY looks absurd and security looks optional, maybe proceed carefully. Or don't. Lazarus probably appreciates your liquidity. Next we have @RegulationDaddy, and he wants to know, if clarity passes, what benefits the most? First of all, spectacular username. Disturbing, but spectacular. Likely winners include XRP, compliant stablecoin ecosystems, tokenized payment systems, and major exchanges positioned for regulatory integration. Markets reward certainty. If regulatory uncertainty drops, capital flows expand. All right, @Sailor Moon Mission wants to know, is Michael Saylor brilliant or dangerously overleveraged? Honestly, possibly both. Saylor's strategy is brilliant if Bitcoin continues long-term appreciation, but aggressive capital market dependency always carries structural risk. He's either writing corporate treasury history or creating the world's most sophisticated Bitcoin stress test. Okay, next question is from @ConferenceMaxiVegas. Is Bitcoin 2026 actually important or just hype? Max, is that you? Okay, this year, important. Historic regulator presence, institutional networking, policy momentum, and corporate announcements elevated beyond normal conference hype. Though yes, there will still be plenty of laser eyes and enough ego to destabilize nearby slot machines. All right, last one for today is from @ExitLiquidityLarry, and he wants to know, if institutions keep buying, when do retail investors win? Larry. Retail wins when it stops reacting emotionally and starts understanding positioning. Institutions move slowly, strategically, and before certainty becomes obvious. Retail often arrives later because emotion chases confirmation. So the answer is, retail wins when it stops volunteering to be Larry. Great questions, mostly survivable usernames. But coming up next, let's tie all of this together, because between hacks, regulation, institutional buying, and global volatility, this market is sending a much bigger message. Final thought, right after the break.
Our beans are washed in ancient waters, filtered through coal seams deep beneath the Utah mountains. Okay, not really. We totally made that up. But it does sound badass, doesn't it? Here's the truth. Premium Guatemalan beans, aged for 30 days in real whiskey barrels, then carefully roasted smooth in the golden light of California, inspired by the legendary Drunkard's Wash Desert Race in Price, Utah. Bold, smooth, with a subtle touch of whiskey and oak. Drunkard's Wash. Whiskey barrel aged, bold and unmistakable. From Whole Shot Coffee Company. Fuel your life.
All right, so here's the bigger picture. Over the past 2 weeks, Bitcoin tested major resistance near $80,000. Institutions poured in billions. Corporate accumulation accelerated. Regulators stepped deeper into the conversation. And yet, the market still remains volatile, cautious, and structurally undecided in the short term. And honestly, that makes sense, because real market transitions don't happen in straight lines. They happen through friction, through uncertainty, through resistance, while smart money quietly positions beneath the noise. In other words, if you are expecting perfect clarity, smooth price action, and zero chaos, you may be in the wrong asset class entirely. What matters right now is this. Bitcoin remains institutionally supported. Scarcity is strengthening. Regulatory clarity is closer than it has ever been. But security vulnerabilities, macro volatility, and political uncertainty are still very real. So this market isn't simply asking whether you're bullish or bearish. It's asking whether you can separate signal from noise. Because the biggest opportunities rarely appear when everything feels safe. They appear when fundamentals quietly improve, while uncertainty keeps weaker hands distracted. That's where we are right now. So stay logical, stay informed, and above all, try not to let every headline emotionally liquidate your conviction. Well, that's it for today's Sen B Daily Brief. If you got value from this, like, subscribe, and share it with someone still panic-refreshing candle charts every 5 minutes. And remember, buy low, cry rationally. The Sen B Daily Brief is a production of Sen B'Hiro Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, Sen B'Hiro. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the Sen B community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbhiromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.